share screen. I think. Maybe where's to open up this. So now can you see my screen? Share already. Oi. Oh. Yeah. Can you see? Okay, I have replicate the same thing on the summary page to explain this. See the 200, 500. Okay, on the left is your cash at bank, on the right is your bank statement. Okay, so I label cash at bank statement step 1. That is where you do comparison, which I explained to you. Okay, you are very clear about debit credit column and the balance column in your bank statement, right? Okay, so you are clear about that. So bank statement is the same. They also come out with 3 columns presented in your book. They have a debit credit column. So in this case, bank statement, debit column is your withdrawal. The bank's credit column is your deposit. Right? So that's why the bank will show as credit 470. That means the bank owe you 470, but you have 470 debit. Okay? So why do I emphasize that this cash at bank is a debit account here and bank statement is a credit account? Okay, because you have to follow the debit credit rule. For a credit account, you credit account credit plus. Then the credit account you debit, you have to minus it. Correct? A credit account when you debit, you pull it back up. But if a credit account you credit, you pull it back down. Remember the debit credit graph, the graph, that's what it applies here. So you treat your bank statement as a credit account. Anyway, it's not inside your books. It's a bank statement. You treat it as a credit account. But your cash at bank is still a debit account asset. So when you have a debit, you debit it, you plus. Okay, debit is going upwards, the top part of the graph, above the 0 point. And you credit it, you drag it down to the credit portion. So it's minus. Make sense? Make sense or not? Okay, so for you to do bank reconciliation, these two parts you must know. You are comparing a debit account with a credit account bank statement. Okay, so these two highlighted already explain the reasons you know already. So now from here, what do you need to do? Go to step 2, update cash book. Okay, this cash book is not a ledger account. It's just a calculation. It's called update your cash book. Okay, it's not a ledger account. Ledger account is your cash at bank. Okay, but this is a step for this module where you do bank reconciliation. You have to show it in your working. Right. So update cash at bank book. What does this mean? What updated cash at spell wrongly. Updated cash at bank. It just simply means you start off with your balance 30. Your cash at bank shows that you have a credit balance of 30. Okay? Though. So now you are going to update it with the items that you do not have but the bank show. And that is the 15 and 500 here. Okay? So what do you do 15? How do you decide whether to plus or minus? You see, when it's a withdrawal in your bank statement, that means what? You are taking out money, right? Yeah, so you have to minus also. That means if your bank show withdrawing 500, that means your cash at bank also withdraw 500, so you also minus. Correct? So you follow the withdrawal column. So down here, you don't think about the debit credit first. So when the bank deposit you $15, that means you are going to receive $15. So you also deposit you plus. That's it. Correct? So after that, you sum out these two items, you will show that you have a credit of 515. Okay, so that means your cash at bank is now updated with these two missing items from the bank. This is step 2. Okay, done already. Okay, so I listed the steps here. Step 1 is you compare cash at bank and bank statement. Step 2 is update the cash at bank, which the calculation is here. But this is not so clear. You need to see what you are doing down here. Okay, so basically whatever you minus, basically usually their expenses are. Whatever you plus is of course deposits are. Okay, you can put here as withdrawal or deposits. That doesn't matter for this example. Okay, then you go to step 3. With this updated cash at bank book, okay, with this updated cash at bank book, yep, hidden my arrow here. This 515 will be the figure at the bottom because it shows balance as per updated cash book. Okay, then this 415, this is your bank statement, will be here. Okay, so now you understand why this step must come first before this step, because you have a bank balance. The thing is you're comparing this and these two, they don't balance. Okay, so how do you start to correct it? First you use this one, okay, the $30, add minus whatever is here to arrive at this figure. So the cash at bank is only updated with bank differences only. Then with this bank differences figure, you have show that, okay, this is my cash at bank balance really. This is what is my accounting books. No more changes. This is final. The minus 515 with all the bank records is final already. Okay, so this is your final answer, 515. But before you can do this, you must show how do you prove your 515 is correct, because your 415 from the bank statement, okay, now this is the part where you must know what's the difference between debit and credit in the bank. Your bank shows a debit 415. Okay, what does it mean? If the bank is debit 415, means your cash at bank, your bank statement, your recording your account is minus 415. Okay, now you bring back your debit credit theory here. Okay, why? Because a bank statement is a credit account. Okay, so your bank statement is a credit account, so that means in your bank reconciliation the 415 is minus credit 415. Why? Because withdrawal here 1007, okay, minus 815. Okay, so that means your withdrawal is more than your deposit, right? Correct or not? So that means, isn't it a credit balance? This debit here in the bank is actually a credit balance, right? Because in your credit statement, minus is good. That means you have money. Okay, you see, minus 415 is a debit in your cash at bank. It started off both is the same. Minus means you have money. Plus means you have no money. You overdraw already. So no money in your credit statement means no money in your cash at bank account. You understand? Okay, so when it's debit, that means it's no money. Now you are reconciling based on your perspective of your own side, your debit side of the books. So that means when this bank shows like that debit, you have to start with minus. Okay, so now this part you are clear. Adrina are clear now. Okay, so you start with this part done already. Now you settle the yellow portion, the one that is here. Okay, so this part you are looking at the perspective of your debit account. A bank reconciliation, you are doing a perspective of a debit account. Your point of view is debit account, or what you all call POV. Your point of view is debit account. So whatever you have debit, you debit also. Add. Wherever you credit, you minus also. Minus. Why? Because you are telling your bank side here, hey, you have minus 415. That's not correct, because my accounting books I have debit 200. Okay, debit 200. And my accounting book I have credit 300. Okay, credit 300. So including this instruction in your bank reconciliation, this, then you get your updated cash book, cash at bank book. Okay, right? Correct or not? So this is the whole process. Okay, before anyone can tell you the step 1, 2, 3, but you must understand why this kind of steps. So by adding these two arrows in your summary page, it helps you become more clearer. Okay, so what is lacking in your textbook? They did not add these two arrows. Because most students, they are confused. They just look at 4 table, to them it's just 4 table. What's the difference? They can't see. The book done a very good job of highlighting this point. Yeah, that part is good. But then one more step could be improved on is to add these two arrows. Okay, so you can draw in pencil your own two arrows that this is here. That means you are comparing, and to take note why this is credit is very important. Otherwise, you will never get the answer here. Get it? If you put a plus 415 here, your answer will be different. You see or not? See, it becomes 315 because it's not a negative, it's not a credit. See, so be very careful on this part. That's where most people cannot balance, find bank reconciliation so difficult because they are not clear about this relationship. Okay, so the easy way to do it is you treat your bank statement as a credit entity, your cash at bank as a debit entity. So when you are able to see it from this POV, this point of view, then you will not be blurred. Sure, every time you'll get it right one. Okay? Okay, take a while to digest this. Okay, maybe you can take a screenshot of this or you draw the lines in your textbook. Anyway, this replicate exactly as your textbook. Just draw the lines to remind yourself. Maybe you can add these 2 points here. The highlighted this one. Why, what to add, what to minus in each of the two, step 2 and 3. Okay, step 2 is minus all the withdrawals, add all the deposits. Step 2, see, I boxed it up. Step 3 is plus all the debit in your cash at bank and minus all the credit in your cash at bank. That's it. Okay, easier. Yeah, your explanation will be easier. Okay, so this part done already. Then I want you to flip to your textbook. Turn to all these pages, page 123, 125, 129, 130, 132. The topic, underline cash and bank definition, the difference between two, if they ask. Reasons for cash and bank control. 129 is about internal control. 130, why do you need to protect cash? That's where bank reconciliation comes in. Okay, so the theory for this chapter 8 is found in these few pages. You can easily find because it's all diagrammatic and everything. Okay, incidentally, the workbook question has asked about the theory on page 95. Question 1, 2, and 5, which is 129, 130, 132 is the answer to your workbook question 1, 2, and 5 on page 95. That's it. So for this topic, theory is also very straightforward, not much theory. Because I explained earlier in this course really, in your tuition class, right? The only heavy theory is chapter 1 and 2. From chapter 3 onwards, it's all practice. The theory is very minimum. So any question on this bank reconciliation?